Ever feel like you're just constantly trying to catch up? Like there's just always one more deadline looming.
Tell me about it.
Well, get ready for another one, folks, because we uncovered something pretty important that honestly a lot of people might not even be aware of.
Yeah, this is one of those under-the-radar things that could really sneak up on you.
Exactly.
Yeah.
It has to do with anyone out there who's running an LLC or a corporation. We're talking BOI reporting, and today's deep dive is going to break it all down.
And we're pulling all the essential info straight from the tax reduction letter so you know it's legit.
All right, so maybe let's start with you giving us a little background on this whole BOI thing. What is it, and why should we care?
So BOI stands for Beneficial Ownership Information. And it's all about transparency, basically. The government wants to know who's really behind these business entities.
Ah, okay. So like if I have an LLC for my, say, freelance design work, they want my info on file, right?
Precisely. And the tax reduction letter actually lays out some crucial dates you need to be aware of. January 1, 2025 is the big one.
That sounds ominously close for a deadline I've never even heard of.
Right. That's when these new reporting requirements officially kick in for existing businesses. And if you formed a new business after that date, you have a 90-day window to file.
Okay, got it. So that's the when, but what about the why? What's
Yeah.
prompting this sudden need for more transparency around, who owns what business?
Well, it's not so sudden, really. This has been in the works for a while. It's part of a much larger global effort to combat financial crime. Think money laundering, tax evasion, all that shady stuff.
Yeah, so they're trying to close those loopholes.
Exactly. By making it much harder to hide behind layers of shell companies and obscure ownership structures.
Okay, that makes sense. And I think the article uses a really good example that a lot of our listeners can probably relate to someone who owns, let's say, several rental properties, each under a separate LLC.
Definitely a common scenario. And it highlights a really important point. This applies to every single LLC, even if it's just you, even those single-member LLCs.
Ah, so there's no flying under the radar on this one.
Nope. And this is where it can get a little bit tricky, because even those entities you might assume are disregarded for tax purposes might still be subject to this reporting.
Disregarded entities. See, that's where I get lost in the jargon.
Right, sorry. Basically, it means an LLC with just one owner that for tax purposes is treated as an extension of the owner themselves, not a separate entity.
Okay, yeah, that rings a bell.
But when it comes to BOI reporting, things aren't always so simple. State laws vary, and what flies in one state might not in another. So it's crucial to check the specific regulations in your state.
Ugh. Yes, the joys of navigating state-specific regulations. I've spent way too much time trying to decipher those forms,
Yeah.
almost as fun as doing taxes. But on a more serious note, what are the consequences if someone, just misses the deadline?
Yeah, ignoring this is not something I'd recommend. The penalties are pretty steep. We're talking $591 per day for late filing, with the potential additional penalty of $10,000.
Wow. Okay, so this isn't just a slap on the wrist. They mean business.
Uh,
All right, so let's break it down for our listeners. What does this all really mean for you? If you're hearing this and thinking, wait a minute, I have a couple LLCs, or I might have a disregarded entity somewhere, what should you be doing right now?
Don't panic, but definitely don't procrastinate. Now's the time to start gathering all those formation documents for your businesses. The ones we all swore we'd keep perfectly organized.
Yeah. Organized is a bit of a loose term for my filing system, I'll admit.
Hey, we've all been there. But seriously, having everything in order will make this whole process much smoother.
Definitely. And speaking of resources, this tax reduction letter might seem niche, but it's honestly a goldmine of information on this very topic. So listeners, don't just take our word for it. Check it out for yourselves.
And here's something else to ponder. This push for transparency in business ownership. It's probably just the beginning. It'll be really interesting to see how this impacts the way businesses are structured in the future, or even how investments are made.
Oh, that's a really good point. Could we see a shift towards simpler, more transparent business models? Or maybe even more uniform regulations across state lines?
It's definitely within the realm of possibility.
That's pretty fascinating to think about. Okay, so to wrap things up, listeners, don't hit the snooze button on this one. This deadline is closer than you think. Go dig up those entity formation documents, check your dates, and maybe even take a moment to consider how this global trend toward transparency might shape your business strategies moving forward. We've included some helpful links in the show notes. And, as always, stay tuned for more deep dives into topics that matter to you. We'll catch you in the next one.